everybody out there in Facebook land. Woo! Hope you're enjoying my wonderful background. But also in YouTube land, because we are here today to learn how to read an auto insurance card. Not the most sexy thing to talk about today, but something that is actually quite necessary. So let me share a screen and we're going to dive into an example of an insurance card, and I'm going to break down some information for you. Okay, here we are. It's your general insurance card in the state of Florida. Now, I'm going to use Florida because I actually live in the state of Florida. If you live in another state, you may notice your coverage letters to be a little bit different. If you're in another country, this may not be of interest to you, but maybe it'll help you out if you ever come to the United States. So first of all, let's take a look at the top. Now, this is pretty self-explanatory. This is your policy number they issue you. Here, let me go ahead and do something here. This is the policy number they issue, right? You don't have to worry about this number. That really is nothing to you. You don't have to worry about a company number. But what you do want to pay attention to is your effective date, okay? This says here at the bottom of this, not valid more than 1 year from effective date. Well, your effective date in this case, this was issued, in other words, January 26, 2022. So that means you have insurance coverage from that date until January 26, 2020, or we're going back in time, 2003. My writing's horrible, but you get the picture, right? So that's like the first line. Now, what about this? And what about this? Forget this property damage in the middle. Personal injury protection and bodily injury. I have personally worked in the insurance business for over 20 years, and in particular, auto claims. And I get so many people that are confused between these two coverages, and they don't understand what the difference is. Well, if you look down here for this is personal injury protection in the state of Florida, is called PIP. This is your coverage right here, P10. So what does that mean? That means that you have 10 equals $10,000 worth of personal injury protection coverage, okay? So in the state of Florida, that means that coverage is for you, okay? That is for you. That is $10,000 of coverage. You may have a deductible, you may not, but if you ever get into an automobile accident, the first $10,000 your insurance company will cover. It is mandatory by Florida law. It doesn't matter who is at fault, you or the other person. Everybody goes to this coverage first, okay? And let's say your medical bills are more than $10,000. Well, then it will go, if the other guy's at fault, it'll go against their policy to pick up the difference, okay? Which is bodily injury. So just keep that in mind, and I'm going to clear this out. Now, bodily injury, that means it's for the other guy, right? And this is the coverage that matches, letter A, all right? A equals bodily injury. Now, you may or may not carry this coverage. This is something that is not mandatory in the state of Florida, or I don't know, maybe in your state it might be. But this means it's coverage for the other guy. So let's say you got into an accident and it's your fault. They got injuries, okay? So since they got injuries and remember they already went to their PIP, they exhausted their $10,000 in coverage. Now they're coming to your policy to pick up the difference. That's what your coverage is. And you can elect to take out as much coverage as you want. And it depends on your insurance company, how much they offer. So that protects you. And you're thinking to yourself, well, why would I want to buy this coverage? Why would I want to pay for the other guy? Well, let's put it this way. If you're at fault and you don't have this coverage and they've exhausted their 10,000 limits, they could literally sue you for the difference. They could come after your personal assets and sue you. So it could be in your best interest to actually buy this additional coverage, cover you up just in case. You never know. Okay, so just keep that in mind. All right, we're going to get out of that. So what's this? Property damage. Okay, property damage is to cover the other guy as well. Okay, we'll get into your coverages in a minute. But let's say you're at fault, you hit the other guy, they've got $5,000 in damage to their car. Okay, well, they're going to come to your policy for property damage coverage. Now, I know in Florida, the minimum is like $10,000 you need to carry for property damage, and it can go as high as you want. But that's what that means. It covers the other guy for coverage. Now, getting into this coverage, what is this? That's an optional coverage. C represents MedPay or medical payments coverage. In other words, if let's say you come to your policy, you exhausted your $10,000 PIP coverage, right? You exhausted it. You have an additional, and it could be up to $20,000 in additional medical payments coverage to actually pick up your cost from here to here. Because let's say the other guy is at fault, but he doesn't carry bodily injury coverage. So you're on the hook for maybe thousands of dollars of medical expenses, right? Because the other guy doesn't carry it. So if you have this C coverage, then you are protected. So actually, that's a really good idea as well to carry on your policy. Now, moving on. What is this? D500, D like dog 500. That actually is comprehensive coverage. What is comprehensive coverage? Comprehensive coverage is like, say, for anything other than a collision, anything that did not collide with your car. But let's say, I don't know, squirrel got into your engine and shoot up all the wires. Comprehensive coverage. Let's say a tree fell on the hood of your car or busted up your windshield. That's comprehensive coverage. Let's say your windshield just cracked out of nowhere. Comprehensive coverage. Let's say Mother Nature, a big hailstorm, pitted up your car. Comprehensive coverage. You get the picture, right? Now, what does this mean, $500? Well, that means you got a $500 deductible. So you are responsible for the first $500. And then your insurance company will pick up anything beyond that cost to repair your car. Okay, sort of like a copay with your health insurance coverage. You think about that. All right, what about this one right here? G is in girl, 500. Similar to D 500, but G is the collision coverage. And that is a very important coverage, man. Very important, especially for you. Whether you're at fault or you're not, let's just say, if you don't carry that coverage, you don't get your car fixed. That's the bottom line. If you do carry it, then this 500 represents a $500 deductible that you pay. So you're responsible for the first $500 in damage, and then your insurance company picks up the difference. So if you're not at fault, but you go to your insurance company and you get your car fixed, you pay your $500, they pay the rest, they're going to do what's called subrogation. They're going to go after the other guy's insurance company, and they're going to ask for your deductible back. And of course, the money that they paid off your policy. And a lot of people, you know, they freak out. They say, I don't want to use my policy. Well, number one, I shouldn't have to pay a deductible because I'm not at fault. And besides that, you know, my rates are going to go up because I'm using my policy. That is not necessarily true. It really depends on your history with your insurance company. and how many accidents you've had at fault in the past few years, if it'll raise your rates or not. But if they know, for instance, that you are not at fault, and they'll know after the claim's done, and that we're getting the money back from the other insurance company, and no, it should not affect your rates at all. So don't be afraid to use your collision coverage, because I mean, that's what it's there for. That's what you bought the insurance in the first place. So use it. If you don't want to wait for the other guy and his insurance company, because sometimes the investigation can be forever, and it could take up to 30 days for them to make a decision if they're at fault or not. So what are you going to do? Sit there with a busted car for 30 days when you've got collision coverage? Suck it up, man. Pay out the deductible, get your car fixed right away, and move on with your life. And let your insurance company hash it out and get your money back down the road. So yeah, man, that's what I'd do. So anyway, let's go on to the next one. We got the H coverage. What is H? H is your emergency roadside service and towing coverage. Very cheap to get to put on your insurance. It's pretty self-explanatory. You break down for any reason other than an auto accident, you need a tow, call up your insurance company. They'll tell you how much your coverage will be, and you get your towing, reimbursed if you have to pay out of pocket. It's things like that. So it's a good coverage to have, especially if you don't have AAA. You may want to think about getting H coverage. Cool. All right, let's go on. R coverage. What is R1? Well, basically, in a nutshell, R equals rental. It's rental coverage for you. Rental coverage, I know with State Farm now, it's like they don't pay 100%, but they'll pay 80% up to $500 or 80% up to $1,000. In other words, let's say they put you in a rental the day of the accident. You're paying, let's hypothetically just use $10 a day. Of course, it's going to be more money. Let's say it's $10 a day, right? Well, your out of pocket is only 20%. You're only going to be paying $2 a day, right? And State Farm or, your insurance company is going to pick up the other 80%. All the way up until it hits that policy max, which is either the $500 coverage or the $1,000. Which one it is depends on you. You pick the coverage when you take out the policy. So very good to have, especially when you get into an accident and you're waiting on your car to get fixed. Very good to have. Absolutely, definitely recommend it. Now, last but not least, you three. What is you? Well, that protects you. Think of that. You protects you. This is uninsured motorist coverage. That means, let's say the other guy hit you and they're at fault, but they have no insurance. Nothing, man. They have nothing. You've got injuries. You've blown past all of this to cover you, and you still got medical bills coming out the wazoo. The other guy has no policy and he has no money. So what are you going to do? If you got you coverage, the rest of your medical bills are covered. And of course, you get to pick the coverage when you take out the policy. Another very good coverage to have. All right, so we broke down everything on here. The rest is pretty self-explanatory. You got the year and make of your car, the VIN number, the name of your agent, your phone number, their phone number. So anything you need, I would recommend just calling up your agent's office. So, hey, it's a lot to take in, but all I can say is just pay attention to your coverages. And hey, there really is no such thing as full coverage as most people think. Most people think, oh, well, I got XYZ on my insurance card, so therefore I'm fully covered. No, because there's such a range of insurance coverages that you can take out. So be careful about that. That's what I'm saying. Think about what you need. What can you afford? And if you're willing to take the risk or not. It's as simple as that. So, hey, thanks for watching. I know, again, not a sexy subject, but almost a necessary evil to really learn about these coverages and know what you have just in case that accident happens, man. So again, drop me a like, comment, whatever. Got questions about insurance coverage? Ask me. I'll let you know the best I can. And you take care, and we'll see you next week. Bye.